It's Monday, 3rd of November, 2025. Welcome to your news update on Blip Brief, small but almost everything updated every weekday. All right, let's jump right in. Starting the week looking back at Friday, that 4-week rally we saw finally seemed to hit pause.
It did. The main indices ended in the red. The Nifty 50 closed down 0.6%, and the Sensex slipped 0.5%.
So definitely a cooling off. What was driving that? Just end-of-week profit-taking?
Yeah, largely textbook profit-taking.
Yeah.
Maybe a bit of that lingering global uncertainty playing a role, too. After such a good run, investors look for reasons to lock in gains.
And that seems to be carrying into today.
Looks like it. The cues from the gift Nifty signal a cautious, maybe slightly lower start. So yeah, consolidation probably continues, even though November's usually a good month seasonally.
Right. But even with the main indices down, there were some pockets of real strength, weren't there? It wasn't all red.
Not at all. That's the interesting part. The internal market health, showed some strong spots. The Nifty PSU Bank Index, for example, jumped 1.6%.
Okay, 1.6% for PSU banks. Why such a strong move there?
Well, it's partly the successful cleanup of bad loans, the NPAs, that many have done, plus their expectations for sustained credit growth as the domestic economy keeps performing.
Makes sense. And defense stocks, they seem unstoppable lately.
They continued their run, yeah. The Nifty India Defense Index was up 1.0%. And you saw specific names like Bharat Electronics really pop, up 4.0% on Friday alone.
Wow. And that's the Make in India effect still playing out strongly.
Exactly. It's policy-driven. The push for domestic procurement gives these companies really solid long-term order visibility. Investors like that certainty.
But on the flip side, we saw some drags from typically defensive names, right? Cipla down 2.5%, NTPLC down 2.4%. Does that signal anything deeper?
That's a good point. When large-cap defensives lead the decline, it can suggest a couple of things. Either specific news for those companies or maybe, more broadly, some investor concern about input costs.
Especially for power companies like NTPC with fuel prices.
Precisely. Could be nervousness about rising global fuel prices impacting margins. So the market's sort of balancing these high-growth bets like banks and defense against pressure points in infra and energy.
Okay, let's switch gears to money flows. Foreign money, specifically. Seeing a really interesting split here between stocks and bonds.
Yeah, this is quite telling. FII, buying in the equity markets, it definitely stalled recently. Reflects that caution we talked about, maybe valuations looking a bit stretched.
But the debt market story is completely different.
Completely. FPI inflows into Indian government bonds actually hit a 7-month high.
7 months. Okay, why the big divergence? Why pile into bonds now?
It suggests global investors see, well, renewed faith in India's sovereign stability. And they're looking for yield, especially with potential shifts coming from the U.S. Federal Reserve.
Ah, the Fed pivot expectation.
Right. If the U.S. Fed pauses rate hikes or signals cuts eventually, then the relative safety and the, decent yield on Indian government bonds becomes much more attractive.
So confidence in India's long-term stability, the debt side, but maybe still a bit wary of stock market prices right now.
That sums it up well. And interestingly, the rupee held pretty stable against the U.S. dollar despite all this.
Okay, let's unpack a really big number now on the trade front. India's exports to the U.S. saw a massive drop.
Massive is the word. Between May and September this year, 2025, exports to the U.S. just collapsed, down by 37.5%.
Whoa, 37.5%? That is staggering. What on earth caused such a sharp decline in just a few months?
It's being directly linked to increased U.S. tariff pressures. An extra 25% duty was slapped on certain Indian exports.
25% extra duty. Ouch. On what kind of goods?
It seems to have targeted specific manufactured components, some textile goods as well. Basically, it made those Indian products significantly less price competitive in the U.S. almost overnight.
Shows how quickly policy can bite, doesn't it?
Absolutely. Really highlights the sensitivity of trade flows to geopolitical actions and tariff decisions.
Okay, shifting from that external pressure back to the domestic picture. Consumption seems, well, more resilient. GST collections looked okay for October.
Yeah, they showed solid growth, up 4.6% year-on-year. That points to healthy underlying economic activity, which is good news heading into the main festive period.
And does that tie into fuel sales?
It does, partly. Petrol sales were up 7% year-on-year in October, likely fueled by festive season travel, people hitting the roads.
But diesel?
Diesel sales slipped just a tiny bit, down 0.5%. Now, September was very strong, so it's a slight dip from a high base. But diesel is often watched as a proxy for industrial activity, freight movement.
So maybe suggesting consumer travel is strong, but industrial movement might be cooling off just a touch?
Could be. It's something to watch. Consumers are spending, but the industrial pace might be moderating slightly.
And what about the investment side, particularly venture capital? We've heard about a shift there for a while.
Yes, the VC environment is definitely maturing. Fundraising is moderating. The whole growth at any cost thing is fading.
Investors are getting tougher.
They are. They're demanding clearer strategies, better unit economics, and importantly, faster paths to exits. Liquidity is key now.
Right, getting their money back sooner. Is that creating tension with founders who need time for big innovation?
Oh, absolutely. There's definitely tension. Founders argue, innovation needs time and risk capital. But investors, especially their own backers, the LPs, they've shifted their risk appetite. They need to see returns.
So the focus shifts to companies closer to IPO or acquisition?
Pretty much.
Hmm.
Mega rounds for very early stage pre-revenue ideas are much harder to come by now. It's more about sustainable growth, a clear path to profitability or exit.
Okay, let's broaden out to the global picture. Oil prices, always crucial for India. They're ticking up again.
They're rising, yes. The why seems to be cautious supply management by OPEC plus a low.
Worried about a glut.
Exactly. They confirmed they'll manage supply actively, pausing production hikes for Q1 next year. Basically, they're worried about slower global demand creating too much supply, so they're keeping things tight to support prices.
Which means potentially higher import costs for us.
Unfortunately, yes. That's the direct impact.
Okay, staying global U.S.-China relations. Any positive signs there affecting markets?
There was a bit of a lift to sentiment, yeah. Asian stocks were mixed, but the mood improved after details of a sort of trade truce emerged.
What was I read?
China signaled it would suspend some additional export controls, particularly on rare earth metals, and also end semiconductor investigations targeting U.S. firms.
Ah, the rare earths are key. Easing that tension helps supply chain worries.
Definitely. Rare earths are critical for so much manufacturing, so any sign of easing controls there is seen as a positive for global supply chain stability.
But elsewhere in the U.S., things are less stable. That government shutdown is still dragging on.
It is, entering its 6th week now. And it's not just political theater, it has real economic consequences.
How so? Beyond just the uncertainty.
Well, domestically in the U.S., federal assistance programs, including food benefits, are being hit hard. You're seeing reports of families struggling. Globally, it just adds to uncertainty and raises questions about the U.S. government's basic functioning and budget stability.
Right. Meanwhile, diplomatic activity continues. Israel's foreign minister is visiting India this week.
That's right. The visit is expected to focus on deepening bilateral ties, particularly in high-tech areas.
Like joint ventures in tech and defense.
Exactly. Technology collaboration, defense procurement. It signals that growing strategic alignment between India and Israel, leveraging each other's strengths in critical sectors.
Okay, let's bring it back to corporate India. The IPO market seems pretty active again.
It really is buzzing. Shows investors are willing to deploy fresh capital when they like the story, especially if there's a premium expected.
Seeing that in the gray market premiums.
Yeah. Lenskart IPO, now on day 2, its GMP is reportedly up around 21%. Orkla India's IPO allotment is being finalized. GMP also strong, up about 13%.
And foreign investors are participating.
Very much so. We saw strong FPI activity, specifically targeting IPOs in October. They're definitely chasing these premium listings.
I'm looking at companies that have reported Q2 results. Any standouts or interesting strategic plays?
Well, Vedanta is seen as pretty well positioned for the commodity cycle after its results met expectations. But perhaps more interesting strategically is Larsen & Toubro, L&T.
L&T had steady results, right? Supported by good execution.
Yes, solid performance in their core business. But the real excitement the growth story analysts are watching is their expansion into new areas.
New areas. For a giant like L&T, what are we talking about?
Green hydrogen, semiconductors, and defense.
Huh. Green hydrogen and semiconductors. How does a construction and engineering giant pivot into those high-tech fields?
That's the crucial link. They're leveraging their core strength. Scale engineering, building a massive green hydrogen electrolyzer factory, or constructing an incredibly complex, clean semiconductor fab that requires precisely the kind of large-scale project management and construction know-how L&T excels at.
Ah, so applying their existing expertise to build the infrastructure for these new industries.
Exactly. They're using their physical engineering muscle for tomorrow's high-tech infrastructure needs. It's a smart strategic move.
Fascinating. And speaking of tech-changing industries, hearing noise about the legal sector finally shifting its business model away from billable hours.
Yes, That shift seems to be gaining real momentum. The traditional time-based billing is starting to erode.
What's forcing the change? Is it just client pressure?
It's largely technology, specifically AI. AI is getting really good at handling a routine, high-volume tasks, think document review, e-discovery, initial contract drafting, basic legal research, tasks that used to rack up tons of billable hours.
So if AI does the grunt work, what do lawyers bill for? How does the model change? Just fixed fees?
It's becoming more sophisticated, moving towards outcome-driven services, things like advisory retainers focused on high-level strategy, maybe success-based fees for big litigation wins or M&A deals.
So value shifts from time spent to expertise applied and results achieved.
Precisely. Law firms now have to demonstrate they can use tech to be faster, cheaper, more accurate. They need to be tech integrators as much as legal experts.
Big shift. Okay, before we wrap the main segments, let's highlight the big science and tech win for India recently.
Absolutely. That would be ISRO's successful launch of CMS-03, India's heaviest communication satellite yet.
Launched on the Bahubali rocket, right? The LVM-3M5, even with bad weather.
That's right. A really impressive feat, launching our heaviest communication satellite on our heavy-lift rocket.
What's the deeper significance there beyond just another satellite?
It's a critical capability demonstration. Successfully using the LVM-3 for such a heavy payload proves India's growing capacity to handle major space infrastructure projects independently. It boosts digital connectivity, yes, but also strategic communication security and overall self-reliance in space.
Very important milestone. And finally, we absolutely have to celebrate a massive win in sport.
Oh, definitely. The Indian women's cricket team winning their first ever World Cup. Historic victory against South Africa.
Truly phenomenal achievement. And the BCCI announced a significant cash reward, too.
Yes, well-deserved. And within that team performance, Deepti Sharma's contribution was just incredible. Player of the tournament.
She set a record, didn't she? First player ever, men's or women's World Cup.
To score over 200 runs A&D, take 20 wickets in a single edition. Just unbelievable all-around dominance.
That kind of performance and the win itself must be huge for the profile and economics of women's cricket in India.
Immense. It drives investment, captures public attention, and really sets a new benchmark for success and visibility.
Fantastic stuff. Okay, let's wrap with a final thought for our listeners.
Yeah, thinking back to that trade number, that 37.5% drop in exports to the U.S. in just months, it's such a stark reminder, isn't it? How quickly global policy, like tariffs, can fundamentally reshape economic realities for entire sectors.
So the takeaway for you?
Use that as a reminder. Always keep an eye on the macro news, the policy shifts. They have to drive your business strategy, not just the quarterly earnings cycles. You need both perspectives.
Wise words. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.